Welcome to the early bird edition of the Captain's Blog. Horrible. I'm Dave McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there on Wall Street, make it understandable to you on Main Street. Post-election euphoria gave it back one of the worst weeks this year, but not last week. Positivity came back. Why? Earnings came in better than expectations, especially one of those names out there that you can't pronounce that the FOMO crowd is chasing, LEN, came in at justified current levels. Did that positivity continue this week? The holiday shortened week? Would the people take their ball and go home? Here's your week in review. Well, as of this taping, we're hitting record levels in the Dow and the S&P and the Russell. Again, what happened? We started the week with the incoming president nominating a Secretary of Treasury that's actually qualified. Wall Street experience, Wall Street responded in a positive way. Yesterday, Tuesday, the incoming president started tweeting about tariffs. There are certain companies out there, certain car companies, that took it on the chin, had one of the worst days in history. Be prepared for that. The tweets are back. And lastly, inflation numbers came out this morning. The PPI, Producer Price Index, say that twice, came in, and inflation is showing that it is still sticky. What does that mean for the market? Again, the market is still pricing in a Fed rate cut in December. But going forward in 2025, we believe that they will pause for a number of reasons, letting the cuts make their way into the market, into the economy, and again, with a new administration coming in. So again, in positive territory for the holiday shortened week, and we'll take it. Here's what to look for next week. Other than the next 4 to 5 days, it's all about geopolitical risk. Will the truce hold in the Middle East? With North Korea, joining Russia in the fight against the Ukraine, will that bringing Europe? And lastly, retail sales on Black Friday. Did you as a retail investor still show that you are strong, that you're willing to spend? Again, these numbers, retail sales, as well as geopolitical risk, with a market at an all-time high, means that you need to be proactive in your portfolios. Again, take your RMDs, your required minimum distributions. Pay attention to taxable consequences when you purchase. And lastly, if you do have a loss in the portfolio, now would be the time to take it. Here's your personal finance tip of the week. I actually had the pleasure of educating my son where it came to what the market meant. And a lot of people out there believe it is the Dow Jones. Well, that's fine, but the Dow Jones is just 30 stocks. I suggested to him, and he actually listened, to look at the S&P 500 names versus 30. Look at the Russell 2000, which are smaller companies, or the NASDAQ where it comes to technology. Again, do not invest in just one or pay attention to just one. Again, it's a game like Trivial Pursuit. Trivial, I can't even say it today. I must have hit the eggnog. Different colors in that pie. Again, don't chase. Bingo out there on the Captain's Blog bingo. Again, be there before the crowd gets there. And don't let it repeat, Len, be in the FOMO crowd. So thanks to all of you out there, from my family to yours. Have an exceptional Thanksgiving, and we'll see you next week on the Captain's Blog.